me ask you this: what's new in your world this week? How about hopscotch? There's a lot of fun things with hopscotch.
Yeah, so we're continuing to try and close our lead investor. Additionally, we've got a new website hitting the fan, hopefully tomorrow, and we've kind of begun development on our kind of B2C product, where a regular everyday user will be able to kind of utilize our prices. So we're trying to work with some different applications such as Quadrata, which is kind of a scalable KYC AML solution on chain, as well as Hashflow, which is kind of how we're bringing our prices in a kind of zero slippage, non-custodial environment to be able to basically work with a self-custody user who's trying to swap, $50 of one asset into another, potentially cross-chain as well. So got a lot going on. We've been kind of in the weeds again in terms of our development, and things are starting to happen. After kind of our chain integrations last week and the week before, where we onboarded to Arbitrum, Avalanche, Optimism, and Polygon, that's kind of like really changed some of our infrastructure and how we view our problem. So we're trying to kind of capitalize on the opportunities we see there as well. So yeah, definitely kind of hitting it from all sides and trying to survive.
Yeah, it's really really just funny. Morgan, you're like complete, like ridiculous, like the ability to do the complicated, super complicated coding stuff, and then like the complete inability to do anything related to the front end. Like
it's like my kryptonite. It really is my kryptonite. Like it's like I forget how to code when looking at JavaScript and HTML.
Yeah. Like last night, or actually most of the day yesterday, Morgan was like, "Look, I just want to remove the underline from this link. That's it. Just like remove the little purple text and the underline thing." And I was like, "Okay, just add, text decoration equals none." And Morgan was like, "But wait, like where? Like I've been trying for like hours."
It's someone. It's like someone else is really good at that.
Yeah,
I was
no,
trying to
everyone
think someone
else
else in the family is good. Yeah.
Yeah, no, it's just really because like I'm the exact opposite, right? Where it's difficult for me to go the other way, and so it's just really, I don't know. It's funny when you look at something and you're like, man, yeah, this is super easy. Like it's just like these two lines or blah blah blah, and then you just don't realize that like how much time or experience or like just like having spent so much time doing that stuff, you're just like, oh yeah, it's this thing. You don't know that? Oh, that's too bad.
All right, well, enough with the embarrassing stories from my side. Taylor, what's going on in your world?
Yeah. I mean, we're gearing up for deposits. Our last, we've been able to integrate Wallet Connect and Coinbase Wallet pretty smoothly in terms of actually initiating a blockchain transaction and like sending it. We're in the final step of just like making sure that our server reads it correctly and puts it in the right spot, which is exciting because that means we get to do our final tests before hitting the launch button, which is woohoo, finally, right? So that's most of my time, honestly, is just trying to verify that, validate it. I did a bunch of work in terms of like gas fee estimations late last week, which was really kind of interesting to play with the Web3 providers again. Yeah, no, there's lots of like little tiny intrinsic rules that the Web3 stuff has. That's really kind of fascinating that it hasn't been dumbed down yet in a way. I'm constantly reminded about how complex crypto is and just how complex like the verbiage and the documentation around everything is. So it's just it's fascinating.
Oh, that's good. Right before you came on, I was talking to Morgan about the hopscotch logo or the motto, trade anything to anything, and that he's very much inspired me to like change my personal motto to I want to be able to explain anything to anyone, and that's so hard to do. Just like even what you just said, we're still in such a complex universe, and it just gets more and more complex all the time.
Yeah, I mean,
interesting.
Like it's just, I don't know. Like I was baffled by it when we first got into crypto, of like the phrasing and the terminology used, and just like how confusing it was and whatnot. But like it kind of made sense, right? Like okay, it's a new technology, like it's used by a small subset of people, and okay, if things are called different things and things are difficult to understand, and you need to know what a crypto night algorithm is, or whatever kind of algorithm, and I kind of expected it to become more dumbed down over the years, and I was wrong about that.
I don't know if it hasn't, it's definitely gotten better, but the amount of information has obviously been, an overload, even for, core developers in the sense that there is just so much going on. It's a good thing in the sense that there's a lot of development around, the communities and the code and different chains. But at the same time, it is like impossible to sometimes distinguish what is truth from what is fiction, without kind of going to the chain yourself and verifying it. And sometimes that just takes time or an experience or failing.
Yeah, well, I mean, in that light, right? It's like previously you had a small segment of terminology and data, and it was like that's confusing, but okay. And then that got simplified, but then like crypto as a space like went like this, and so now there's like a lot more stuff that's confusing. Sure, the initial parts might be clearer now, but the bigger bits are.
Yeah, did you guys hear about the orbitals? The kind of the new thing on Bitcoin, and that's like a brand new deal. And it's funny, just working in this space too, that Sonia, our coworker, like knows the guy that kind of discovered this or developed it. But it's just like, here we go. Here's another thing to figure
Well,
out. Morgan, have you done any of that yet?
so,
I haven't.
John, I was
Go
going to
ahead.
say, in light of explaining everything to everyone, right? Like breakdown orbitals.
Oh my gosh, I can't like this is the challenge for me this week, is to figure out how to do that. From what I understand is this man figured out a way to assign a unique number on like the most very basic level of the Bitcoin network. Like one Satoshi gets its own unique number. So when you do that, you can store more data into each block. And the most like, I don't know, coolest thing that I heard is that he somehow stored the game Doom onto the Bitcoin network, and that's as far as I've gotten with it. That was like last night. I was checking that out.
Yeah,
Morgan,
I
you
mean,
probably know more than me.
I don't know much more, and I haven't had time to look too much into it. What I have seen in terms of similar to your experience is that it does create a new potential demand for Bitcoin block space, which is exciting, and it should be encouraged in terms of its development activity. However, conflicting it might be with the narratives of other chains. So I think the first thing that happened was you're just now starting to see kind of NFTs being ported or kind of created on Bitcoin. And it's kind of a very kind of Ethereum concept. And there's clashing between, the maximalist communities of both. But ultimately, I do think it is a positive thing for, chains to continue to develop and improve upon themselves. In the smallest ways, potentially here with ordinals, could have kind of really big effects. So it's exciting to see it happen. I need to do more research on it, but like, I think I saw someone on Twitter burn an ape and kind of send it to the null address on Ethereum after they moved it to Bitcoin. So it's like you're really getting kind of the full end of the spectrum. It's like, hey, full confidence in this new protocol in terms of ordinals and what's happening. But at the same time, I've seen like multiple scams come up in terms of malware has been packed into deployment packages for deploying ordinals or working with ordinals. So it's a blessing and a curse. It's kind of like the Ethereum community had to go through that and learn from the kind of those experiences years ago, and now it's kind of like seeing Bitcoin having to do that. It's going to be different, and how it's different, I don't know. It's going to be we're seeing that play out in real time.
It's fun. They had me at Doom on Bitcoin.
Well, I mean, it's also fascinating just like how these super complex games that were super complex in the 90s or the 80s or the early 2000s, like suddenly it's like, oh yeah, that's like 5 kilobytes of data now. It's like absolutely nothing.
It is funny. I remember as a kid, like the disk, the floppy disk would only hold so much.
Mm-hmm.
The Oregon Trail would fill up a disk. And now that's just seems so ridiculous. If I were to even show that to, a younger person, they wouldn't even know what the disk is. So just, and that's just in my lifetime in 30 years,
It's true.
37
I was
years.
reading that the use of the floppy disk as a saving icon actually confuses people.
Mm. You don't
Because
see them.
I have no idea what this piece of technology is.
It's just, it's an artifact now.
Yeah.
All right. So I've been dying to get you guys' opinion on this. I think we're ready. Okay. So the White House sent out a statement on the 27th, kind of wrapping up some of the regulatory push that's been going on already and some of the things to expect in the future. And it started out by saying 2022 was a tough year for cryptocurrencies with the collapse of a stablecoin and a major cryptocurrency exchange. And so they go on to further explain that there's going to be new framework to identify risks for companies ignoring financial regulations, misleading consumers, cybersecurity, fraud, things like that. And it just brings us to an interesting space to talk about this kind of thing. And one of the first things that comes to my mind is, what is the difference between a company who is a compliant cryptocurrency company versus a non-compliant cryptocurrency company? And how would anybody even know what they're looking at?
Yeah. I think, Jesus, right? Like, who knows is partially the answer. If you look at a crypto company that is on chain, like where everything is on chain, like you could do theoretically the analysis of like, okay, are they doing the right things? Are they loaning funds out? Like you could actually see the movement of funds and whatnot. But I don't know of a singular resource that like does that automatically for you. Like there's a lot of, do it your own, whatever, DIY research that's involved in that. When it comes to like centralized companies, like the fuzziness gets even fuzzier, right? Like FTX, everybody kind of assumed that, they were being regulated correctly and they were following the rules. And that kind of fell on the responsibility of the regulator to verify or unverify that. And so I think that's going to be one of the very interesting questions that comes through this, is that like, even if regulations are put in place, how do you check it? How do you verify it? Who's checking it? Who's watching the Watchmen in a way, right? Like what processes are put in place? And so it'll be interesting because I think that there's a solution in terms of regulatory aspects, in terms of like saying, hey, this company is compliant on these aspects, or this company is doing X, Y, and Z in order to make sure that they're not intermingling customer funds, and this has been verified by blah blah blah. Like you could end up with a rating score system for crypto companies, but in terms of enforcing regulations, I think that's still a huge question, right? Like you could say, hey, it's unverified, but in terms of enforcing it, like things are on things are on a blockchain, things are worldwide, things are used by anybody. So I don't know how effective regulations from the US or any country, like any entity or whatever, is going to help.
Morgan, like you definitely look at things on chain all the time. Is there like a checklist of things that you will go through before you interact with like a DeFi protocol, or is there something that has to be there for you to feel comfortable?
Yeah, you definitely work top down in the sense that the more popular and more tried and tested a protocol is, the more trustworthy you can be. I mean, first and foremost is you don't want to lose all the money you're working with, whether that's interacting with Uniswap or throwing something into some DeFi yield program that's up and coming and kind of providing a high APY. So you kind of have two ends of the spectrum. You've got extremely tested and not so tested, and you certainly start to build a risk framework based on what you value and what you prefer. If you prefer speed or security or liquidity or price, you start using different applications accordingly. When it comes down to the compliance aspect of different chains, it gets interesting because certain hacked funds may have been deposited into a protocol that you enjoy using. Does that mean you should not be using it for the next hour, day, week, month? How do you know if those assets have been withdrawn from that protocol or not? Is that something that you will need to monitor kind of like as an individual, or there will be services that kind of give you a red light, yellow light, green light in terms of like what you should be thinking about when using one protocol versus another? And to add on to what Taylor was talking about from the compliance standpoint, I definitely want to add that kind of what the administration says is very different than what they're doing right now in terms of the actions by the SEC are different than saying they want to encourage innovation in blockchain. So, the US, recently has kind of, or I should say the SEC has, set themselves on a warpath with blockchain and crypto. For better or worse, that's their decision to make, but it's definitely been, a shot across the bow to everyone working in crypto that, the US is, at least in this point in time, your enemy and not your ally. And it's terrifying in terms of like working in the space in the United States accordingly. Like it pushes you to work outside the US and to be working with projects that, don't fall under kind of the attack vector of potentially the SEC. And it's just like really unfortunate to be able to see that happen. It's kind of like in crypto, one positive aspect has been, maybe institutions will be involved, the businesses, that we interact with on a day-to-day basis will begin to use this technology because of all of its advantages. And now that's just kind of the opposite. Businesses don't want to work in this community. Businesses don't want to interact with this technology. And it just feels like we're falling behind, having kind of been in this space so long. And so it's really kind of sad and discouraging for that. And as a result, we have to kind of find ways to work around it in terms of like, build our companies and build our businesses and building kind of our applications more outside the US for an international audience rather than kind of an audience who we can't do business with. And so it makes it really, really difficult. And so in the context of compliance, it's very different if you're inside the US or outside the US. You probably view compliance very, very differently.
Yeah, which is interesting because like the reaction to Lunaterra and FTX, like it is valid, right? Like those were two very massive like collapses that could have been prevented. And the knee-jerk reaction of, oh, just shut everything down. Like you understand that as a knee-jerk, but it's just not the correct approach to any of it, right? Like the approach of like, hey, this is the right way to do something, or hey, if you want to be compliant, if you want to be check verified or whatever, like go through these steps, or like here's a checklist of like 10 areas or items that you should go through if you're going to do X, Y, and Z in order to maintain security for consumers, in order to add consumer protection, because like that's who got screwed in everything, right? It's the retail investor, it's the regular consumer, and yeah, it's kind of on the administration to help guide and add those protections in an industry where that's very difficult, right? Like they don't have the ability to just shut networks down. They don't have the ability to just cancel an entire blockchain on a whim kind of thing. They have to work with developers and provide frameworks and provide help. And it's extra effort. Yes, it's a lot of work and it's a lot of understanding. But I mean, that's why like the Ethereum Alliance exists. That's why you don't see you see blockchain lobbyists or stuff like that trying to make an impact or a difference by establishing just a relationship of some kind, because the state of things now is just, it's a thing, or sorry, a screw off. Or, yeah.
It's interesting because I've heard, we got two sides here. We've got the blockchain technology side is basically software, right? But then we have this underlying asset that's global, almost like oil. They say data is the new oil. Uh, Cryptocurrency is an asset that helps move data in different ways. And the world didn't stop using oil after Enron. I heard somebody say that the other day, and that's so true. Like the asset of oil was completely separate from the bad actor of Enron. And even though we might be living through this crazy regulatory, I don't know, reaction, which was probably like somewhat already coming, there still is massive investment going on. So kind of my next question is, despite all of the news surrounding the regulations, everything disrupting cryptocurrency companies, venture capitalists are still pumping money into new projects, to startups. So like, are these regulations being targeted in a way where the space is still going to move forward very quickly, or is the U.S. unique in it where it's going to fall behind because of this?
Well, I mean, to answer the first bit, which is like, essentially why are VCs still investing in crypto when look around you kind of thing. And I think that the answer to that is that crypto is the future of stuff. And if you're a VC who's looking at a 10-year time frame or a 15-year time frame, or I don't know, just like a longer term aspect, if you want to invest in what's going to be the future of X, Y, and Z, it's going to be a crypto company in some fashion, right? And I think that to like solidify that in an actual example, right? Like Facebook changed their name to Meta, and like they're now on the metaverse. Like that is their company, right? That's a huge, massive company that said we're going to ditch our previous stuff and go into crypto. However, obviously there's fuzziness around the fact that it's Meta, is it crypto, blah 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 blah. But like,
it's Web3 though.
Yeah,
right?
I mean, that's a solid gauge, in my opinion, of like, yeah, even these massive companies are saying, this is where we're headed. This is what's going to happen. This is what we're going to do. And so I think from a VC standpoint, like continuing to invest in crypto-based companies it makes sense, right? Like, yeah, it might be a bad regulatory period in the US right now. Is it going to still be a bad regulatory period in 5 years from now or 10 years from now? Can the company just move to Europe? Can the company just move to Asia? Can you serve multiple places? Can you be a US company that doesn't serve US customers? There's a lot of possibilities there. And I think even as Morgan is finding, right, like, you're delving into on-chain KYC aspects. So like you're still trying to do compliant things, but just on the blockchain. And so the possibilities of what works, I think, is expanding.
Yeah, I think like you see why VCs are investing in crypto versus other companies or other sectors of the economy. One of the main reasons is ROI. Like in terms of their return on investment, they see that as an upper bound in terms of investing in crypto. At least the crypto venture capital companies that it's in their name, right? The ease I see in terms of like put yourselves in their position is that it is easier than ever to build a global product with a global user base. And so, if you're building something, say just in the United States, 350 million people, 300 million people, a subset of that is now kind of your potential user base of, using your mobile application to do one specific thing to improve your life in a specific way. Instead, using the crypto rails that have been built now, your user base is in the billions of users. And so it's just easier to be able to adopt things that can potentially be, you have to be multilingual and be able to kind of support different jurisdictions in different ways, absolutely. But it is easier to do that more than ever. And so it's kind of like, if you want to build global products, you can choose crypto to do that with. And it's kind of one of the easiest solutions to be able to build specifically financial tools with at the moment. And that's certainly expanding into, past financial tools to health tools to, file services tools, file storage tools. Soon, I'm sure, phone networks and systems and payment plans and subscription services and Venmo 2.0 and everything will just kind of, you'll be able to choose to use those rails instead of the existing rails you use, in terms of like, maybe view it as a backup plan right now, but 2 years, 3 years, 4 years, 5 years in the future, it'll be the primary plan for millions and millions of people around the world.
That's interesting.
Yeah, and I think just to skip back a question real quick, back to the regulatory aspect. I'm just remembering, went to a 0x conference. It was like 3 months ago or 6 months ago. What is time, right? But at that conference, they had a big regulatory talk. And there was one guy, I forget his name, who was on the panel, who was like a past lawyer. And he was like, I can say things that other people can't because like, I'm a past lawyer. I'm a lobbyist now, but like, I'm not like practicing. So like, I'm going to say things on this panel that nobody else is going to say. And one of the things that he talked about was that like, in crypto, it certainly feels like all the regulators are just coming out against us, and like it feels like this giant battle. But the reality is that honestly, most of the people in Washington just don't think about crypto. They don't care. It does not affect them. It's not part of their daily write-ups or rundowns or anything like that. The guy used an example of like with the small aside of Elizabeth Warren, who's very active and against crypto, but she's also very active and against like 10 or 12 other things. But his whole point was just that like, yeah, a lot of this stuff is happening simply because like, they got a thing across their desk that FTX is the new Bernie Madoff. And they got this thing across their desk that said, hey, Lunaterra tried to be the US dollar and absolutely collapsed. And they say, okay, well, it just seems like we should just ban it or we should just get rid of it. There's no real further thought there. And so I think that one of the things that does need to happen a lot of is conversations. It's a lot of knowledge sharing. It's the let's explain everything to everyone, and everyone includes U.S. senators and U.S. congressmen and people in the SEC and whatnot. So I do think that much like 4 years ago, still today, like the biggest issue that crypto faces is just an education problem. Like, that's it. Like at its root, it's just education.
That's a good point. That's a really good point.
Have you ever met someone who's been in crypto? I don't know. When I say been in crypto, learned about it, researched it, at least delved into kind of the reasons why certain chains originated, what they can do and their capabilities. And then, a year, 2 years later, like, it's just not it. It's not going to work. It's not worth it. You know what I mean? I've never met someone like that.
Man, that's true.
I just haven't. I mean, you kind of get drawn into this rabbit hole, and I think, at least personally, you begin to appreciate some of the math and cryptography and things behind some of these ideas as well. And it's hard to ignore when you've had to live through it, through multiple financial collapses now, in terms whether that's on chain or off chain, or in crypto or traditional finance. In both worlds, you begin to appreciate some of the changes and elements of property that kind of these underlying chains bring you, or can provide to you in different ways. And it's going to be better from some people versus others, whether it's more beneficial to, someone using a crypto ATM in Latin America, or if it's more beneficial for a congressman buying a hot dog in Capitol Hill. Like, obviously those are different things and they provide different value to different people, but I think what we questioned before is it possible? And now we're more questioning like, what should we do here? We have the capabilities. Everything here is possible on chain now. We've solved a lot of scaling issues. We're now ready to onboard, the next 10% of the world. We're not to everyone yet, but like we are 100 times more ready than we were before in terms of 2 years ago or 3 years ago.
And that 10% is a huge number. Like this, the scale alone is super impressive. And I love the point you made that has anybody taken the time to learn about this technology and said, this really just isn't for me. I think I'll pass. I've never met anybody either. It's infectious. And it becomes very clear how many people this could help, let alone, just being early to something.
Yeah. I mean, like you see like traders or whatever who say like, oh man, like this is not something that I want to trade. Or you see people who are like, I don't know if we want this part of our as part of our portfolio, which is a valid like financial decision, right? But you don't see anybody being like, oh man, like this might go to zero, but like, oh man, 10 years from now, like we're going to have a digital dollar, we're going to have a digital yen, we're going to have like all of this technology is going to be integrated somewhere, right?
It's true. And, just going back to compliance and what that looks like for people, for you guys as leaders of your company, what has the journey looked like to steer your company towards being compliant and being able to serve U.S. customers? Like, what does that look like?
I'll take a stab at this one in terms of, I think Taylor will have a much better answer, certainly being located and operating in the U.S. I'll try to give a little bit of a different spin on it. Compliance is, the first part of compliance is a headache, meaning, all right, you got to do all of this new to be able to even operate. The second part of compliance is, all right, this could revolutionize our business. Compliance is actually the underlying foundation of why, we can outcompete the competition. It takes, an hour, multiple days to onboard to these existing exchanges. You've got to submit, not only your social security number, but all your family members and their passwords, in order to just be able to onboard. And that transition is moving towards, all right, I can onboard to every single possible decentralized exchange that wants to implement KYC in 5 minutes. And that is such a different experience, one versus the other. And so, in one, compliance is the bottleneck. And for good purposes, you've got to run AML, you've got to run KYC in terms of operating these jurisdictions legally. But on the other hand, if you want to be able to do that in a scalable environment, like that is now possible. That is now the solution. Compliance can take us to the next level. So it's a blessing and a curse. It depends on where you're located, and I mean on chain or off chain, in terms of navigating through these different hurdles. But we finally kind of crossed that threshold, at least at Hopscotch, where it's gone from, all right, we need to make sure that we're checking all these boxes for capturing this information from users and asking users for this type of data, towards, all right, now you can use our services in 5 minutes. And this puts us, at a technical and time-saving advantage versus all of the competitors. That's like the transition we've seen, and I've personally gone through over the past few years.
Yeah, I mean, I've thought a lot about how to explain compliance in a way that doesn't make you zone out a lot, right? Because like nobody likes talking about regulations, nobody likes talking about compliance, nobody likes stepping through all this stuff. Like as you said, Morgan, it's the starting point is that it's a headache, right? And I think that if you equate it to code, I think that the explanation is a little bit simpler, right? Like if you have no compliance, you just don't have any tests. It's just poorly written code with like no real verification or no real testing that something works, or like you push an update and like, oh, I don't know, maybe this will break everything. Compliance is really just, I mean, it's just a solid set of CI/CD. It's a solid set of tests. It's a solid set of checks. It's making sure that your functions are written correctly. It's making sure that when you transfer a balance, the entire balance gets transferred and doesn't get cut off by, I don't know, a significant figure issue or something like that. Like it's just straight up just, hey, we just want to verify that everything works, that everything is correct, that everything is everyone is who they say they are, that the funds that they're sending things to are actually their wallet and not some, I don't know, random scam wallet that includes malware or something like that. Like it's all just consumer protection and regular just processes, which I think is the more approachable way of to view compliance in a way.
Yeah, you guys have kind of answered this next piece. But what what kind of advantage do you think some of these steps you've taken has given you over, the next person who might be trying to come do the same thing?
Yeah, for Hopscotch, it's how can we service self-custody individuals and our businesses, and so people who want to own their own coins and run their own wallets and have property of their own assets. How can we be able to serve that kind of new age of user that is starting to develop in context of all these scams and hacks, FTX contagion in light of. And that's enabled us to think differently. in order to be able to scale to a new user set. So it's like, it seems so straightforward now in terms of having found these different types of solutions in terms of on-chain identity. But in the past, it was like, what are we going to do here? Do we have to implement these KYC services from these 10 different providers and be able to service these 4 jurisdictions in these 3 different ways and using 10 different types of flows for businesses versus users? It's like that is now solved by potentially, a separate company that does that for a living. And you can utilize their services in an almost like add to cart type fashion. And that's what I think we've seen, which makes crypto like really beautiful, is starting to utilize these Lego blocks and incorporating them into other products. Like you build something in crypto, someone can build off of it is like a really important concept. And so you've got to make sure to, for the services we build on chain, we've got to make sure that they're easily serviceable and utilized by other players in an on-chain capacity. It's like really how you start to scale your services. It's not just, people don't always go to Uniswap. They might go to an aggregator like Matcha or 1inch, ultimately using Uniswap for 70% of that, 80% of that liquidity. And so you really have to build your services to just be kind of, user agnostic and app agnostic for, its usability in the first place. Like I think, like Taylor said, it's that underlying code, which ultimately is what matters here. And certainly how you build it and adapt to it and improve it is just as important. And governance processes around that are just as important. But ultimately being that Lego block in the first place is what sets crypto apart from, being compared to traditional finance. The price improvement that jump trading is adding to the markets can't easily be added to by, another retail services company that wants to, provide those best prices to the planet. That's just not what happens and not possible in that type of infrastructure. So it completely changes the game, and it's like a whole new world of imagination. I think in a previous one we called it basically a roller coaster tycoon full of features.
Mm-hmm. Yeah. Yes, love it. Still applies.
Yeah, yeah, and I think that you can take that same view when it comes to compliance and regulations. I like the Lego blocks analogy quite a bit because like in law and in regulations and in the US and whatnot, like laws are built as Lego blocks, right? Like things build on each other, and you have a core set of rules, and that just like expands and it builds, and like you reference those core rules and you add some new ones and whatnot. And it's the same thing in blockchain, right? It's just that the law is code instead of in a document or in a book. And so you have a core set of things, and like you build on that, you change it, and other people use it. And then, 10, 15, 100 years down the line, you look back and you say, actually, this core rule needs to be overturned or overruled or whatever. And that gets adjusted. So I think that there's a lot of similarities between everything once you strip out the like technological aspect of something. Like it's all the same foundational building blocks that you can edit and adjust. It's just that more people can edit and adjust them now, and more people have to verify and approve that you edited and adjusted it correctly.
Mm-hmm. For the average user, how much do you think the recent stuff has changed things for them? Will they notice it? Is it as big a deal for just the person who's using Web3 product or investing in cryptocurrency?
Yes, right. Like obviously, like the things that they were using might be shut down, or they may not have access to them anymore, right? So
there's a good example. Yeah, good example. Yeah. FTX. See you.
So I'd hope that they would notice some of those aspects. But I think that sort of like what I was just saying about compliance being just well-written code. I just think you're going to have a lot better written code. You're going to have things that just work a little bit better, and because it's blockchain based, because it's shareable and buildable upon, like you'll see that the well-written stuff that is compliant gets distributed amongst a ton of different companies and a ton of different projects very, very quickly. And I think that's the real power of having a decentralized network or multiple decentralized networks, is that you do the developer thing of just copy pasta, right? Like you find a solution that works, you find a solution that's compliant, you find a solution that, works within all the frameworks, and you copy it. You might slightly adjust it, you might slightly improve it, but you'll see it distributed very, very quickly.
Well, when you say it like that, it makes it feel like this could be ultimately a net gain for the industry eventually. Because once you have those kinds of things being implemented by everybody, it's kind of an exponential growth type situation where what's good in one section of the world will eventually be good for all, especially if you're using it in a self-custodied way. So I don't know. How do you guys feel about that? Do you feel like this is a good thing or a bad thing overall?
Well, I think the key to all of that, though, is guidance and verification from a third-party source, right? Like, it's one thing to be the coder who looks at something and says, like, oh, yeah, I understand this, and it's better than what there was before. And it's a completely different thing to have, industry standards, or an entity that says, hey, you should look at this, or here's a good example of what to do, or like, if you want to follow good practices, like, here's how Coinbase did it, or here's what they're doing correctly, here's what FTX did incorrectly, or something like, just a very accessible, educated way of describing these things. I think that's the piece that makes it easy to adopt everything. Otherwise you're, I don't know, you have a bunch of nerds, and a bunch of nerds are saying, great, your shit looks good, let's do it, and we're going to call it the Crypto Night algorithm version 1.974B, and it's going to be approved on, I don't know, block EIP 115 or whatever. Like, you got to abstract it and make it accessible, for that to really distribute, and that's the piece that I think is needed.
That's good.
I'm going to add something to that Taylor, our dad, will very much appreciate. And I'll frame it with, I think crypto finally understands who its customer is. And it's the everyday user. I mean, it's the person who can utilize crypto the most. And we have finally got to the point technologically, we're starting to get to the point in terms of a user experience. And, we are kind of, from all edges and all angles, starting to build and cater towards the retail experience. Being able to transfer small amounts of value, being able to convert those in small and efficient ways across different chains and through different applications. So we've finally gotten to the point where, not only are crypto companies understanding who their customer is in terms of it's now everyone, because you can now utilize these global products for global customer base. But at the same time, in terms of those hacks and scams and companies that have, like FTX, the retail expectation has absolutely been raised another bar in very much a good way, in sense that, people are custodying their own assets, they're holding their own funds, they're holding their own property, and interacting with it or holding it or safekeeping it in their own way, in terms of its very unique experience and potentially how you are using crypto or interacting with it. And that's like one of the most important things I think we can appreciate from, the everyday person that can use these assets now. It's unfortunate, tons of people lost money in FTX, but now are they ever going to hold assets with another crypto exchange? God, I hope not, in terms of, I hope we have the tools and knowledge and education that Taylor was talking about to be able to, easily create wallets either on a mobile device with backups or through, safe creation systems on a laptop. It's finally to the point where, you are the customer, and Cater needs to be able to adapt towards your needs and how you're holding your assets and how you're safekeeping your NFTs or entertainment or tokens or tickets or whatever they might be in the future, because now it could be anything.
Yeah. And I think I'll clarify there, Morgan, that I don't think there's a hard fast rule or whatever that like everything is going to move on chain. Like, you're still going to have centralized companies. You're still going to have companies that, custody funds for the user and all these aspects. It's just going to become more transparent. It's just going to become there. You're going to have easy ways to check and verify things. You're going to have easier ways to understand how the business works as a whole, or what it is that they might be doing in the background. It's just going to be easier to see. And I think that's going to be a big component. I mean, if you look at some of the stuff that's been going on with Binance, right? Like, they published their transparency report, and people were like, oh, it looks like they are holding a lot less Bitcoin Cash than they say they are. And, they'd removed that, whatever, transparency report because everybody called them out on it. Some of the additional analysis that went into it was just like, oh, but this didn't actually include the hot wallet funds. This didn't include some of the cold wallet funds. And so they looked at it and said, hey, we forgot to include a bunch of these things, or maybe they did it wrong. I don't know. But like it just gets surfaced a lot clearer. It gets surfaced a lot easier.
That example in itself is a great community moment, where many people at once say, hey, Binance, we saw the report that you issued and it's not correct. We want a further explanation of this. And I think too, as on the part of the user, there is definitely a push to interact on chain, be more proficient on chain. For some people, it's not going to be as easy as others. So you still do need some kind of centralized entity to help with that segment of the population. But now that population has some expectations behind it. They know, hey, here's the risk profile of the investments I'm entering if I decide to go this route. This is what has happened to other people. And up until this point, there's been kind of a rite of passage where if you're going to interact with cryptocurrencies, at some point, you're probably going to get wrecked on a small scale to a large scale. And that's been horrible. But now it's so mainstream. It's happened so many times to even new users. They kind of do that secondary research on their own, knowing, hey, this is what happened to millions of people not 6 months ago. And if we were to have this conversation this time last year, I'm not sure we would even be talking about these same exact things. The industry has matured to such a point to where we expect a lot more out of our centralized entities, and we are looking for a decentralized solution that much harder, I feel like, now than we were a year ago. You guys kind of agree with that?
Yeah, I mean, I think we've spoken about this before when we would talk about the spectrum of Hedgehog and how Hedgehog right now is, say, a regulation first company. And, to build what Hedgehog's trying to build, you have to do that. And they have such an opportunity to expand into the DeFi world. You can't do the opposite. You can't go from DeFi world and work your way into regulation. It's a one-way street, unfortunately. and so they have, they're conquering and mastering this regulation world in terms of holding assets on the behalf of users, how to do that, how you have to do that, or at least now how you have to do that. And capitalizing on potentially being able to educate the user on that full spectrum of information, how to be able to go from that point to owning your own assets and property on chain, and respecting certainly the benefits of both, and making it available for users to be able to interact in both worlds and operate in both worlds. That is, at least, from outside looking in or kind of midway looking in, Hedgehog's goal here. It has done an amazing job, and it does an amazing job from the regulation first standpoint, and it is now growing into the DeFi world. And it's doing that appropriately and with the right products and tools, and it wants to do it in the right ways that are legally correct as well in terms of operating in the United States, and wants to do it in the right way. So it's it spends too much money on lawyers and officials and checking the boxes and making sure it does that for a reason, and that's why you would use them for those services. I mean, it's a trade-off, and they've taken it, and you've got to appreciate that trade-off.
Yeah, no, I don't. So at the beginning of the question, you said you're not sure if we would be talking about this same stuff a year ago. And I almost sure, the specificity of stuff, yes, you're probably right. But I don't know, FTX is just the new Mount Gox in many ways.
That's true.
Or FTX is the new whatever. It happens every so often. The issues are not different; they're just bigger. They just happen on a bigger scale, right? Yeah, Luna Terra screwed up, but it's just the new USDT. There are issues around everything. So I don't know if necessarily we wouldn't be talking about it. But I think that the core root of, to get back to it, right? The customer is the retail investor, right? And the issue is consumer protection for a retail investor, right? John, you said everybody's going to get wrecked in crypto in some fashion. And that's a risk, right? That's not a good thing. And right. That's one of the things that we aim to try and prevent, right? Is like, you don't want to put all your funds into a single token. Like a year ago, yeah, Lunaterra looked like a great investment. It had great yield. And if you invested everything in that single token, yeah, you would have gotten absolutely wrecked. And the answer would have been, you should have had a diversified portfolio, or you should have had a diversified stack. Or if you wanted a stack of stable coins to just hold, like, it shouldn't have just been 100% Lunaterra. It should have been split between USDT and USDC and TUSD and a whole number of different stable coins. And that way, when one collapsed or when one went wrong, it didn't hurt you as much. And I think that's the overall goal that the industry is sort of moving towards in regards to consumer protection, is just like, people are going to be able to make their own investments. People are going to be able to make their own decisions with their funds. The goal is to help them make right decisions, or help them protect themselves if that decision is bad, or if it's whatever. It's not, just shut it down kind of thing. It's not like, oh, don't invest in it at all. It's just enabling smarter practices.
Yeah, I agree with that. And I think that the part where you shouldn't put all your eggs in one basket is not even a unique cryptocurrency problem. And I think it just shows the maturity of the retail investor between last year and this year, and the maturity of the industry as a whole, where the expectation is that there's kind of this, I don't know, underlying cultural expectation that everybody kind of echoes now, that says exactly what you just said. You shouldn't have everything in one spot. You should manage your own funds, hold your own keys for where you can. If you are entering into some kind of yield program or something like that, we all know the risks now. They're very loud and upfront. And I think that's a good thing. Even last year on the TradFi side, we saw a lot of, kind of the meme stocks and things like that. People, buying GameStop at the top and, losing their funds that way. And it was kind of a similar progression where, the newer retail investor had to learn, hey, there's a right way to do this and a wrong way. And if you're going to invest, you have to learn some of these fundamentals. And that's what actually, honestly, I really do love about the Hedgehog product is it makes it easy to participate in that with some very good safety rails attached to it, where you don't have to do a lot of you get to learn, you get to see the right way to invest in things. You get the advice, you get to receive the advice, but at the same time, you can start right away. You don't have to spend these months and months and months going through the highs and lows, losing your money, making the missteps. Like, you could jump in and you can learn on day one. I think that's pretty unique.
It's interesting because you said like, these risks are sort of well known now, now that we've gone through them, kind of thing. And I think I would actually disagree with that. I think that this is just based on went to the gym we went to Louise and I went to our personal trainer, who was our wedding personal trainer kind of thing, and I was just talking about FTX because he was like, how's work going? And I was like, this FTX stuff, stupid FTX stuff.
I think we all said that to a different person.
Oh yeah, everybody said that for sure.
But he was like, what happened? What is it? And I was like, oh, you haven't heard of this? And he was like, no, I haven't, not at all. And I was like, oh, well, let me, Apple bought the documentary rights for it. I thought it was more widespread than this, right? It's going to be turned into a 10 series doc on Apple TV Plus, whatever. And he's like, no, just never. It's the biggest thing since Madoff. Oh, really? Interesting. I'll have to look it up. And so I think that, in some ways, yes, if you're in the industry, if you're paying attention to it, absolutely, you're definitely very well aware of everything that's going on. But when you pay attention to someone who's not in the industry, or someone like our mom or something like that, that hasn't deviated, that hasn't seeped into everybody's flow because it's not their focus. And so the goal of any of it is to you don't want to scare somebody, but you want to say like, hey, like this is what this means, or this is what this does, or this is what you're investing in, or this is how you should approach things. Like if you want to invest everything into a single coin, like you should have that absolute right. But you should also have the right to know that that's a risky thing to do.
Mm-hmm.
And so I think that's that's the goal that anybody is going to be approaching.
Man, fair point. And actually, it does put some of the responsibility on us who believe in the industry to continue to talk to people about those kinds of things, right? Or,
and like actually to expand on that and to tie it to what we were talking about earlier in terms of regulations and guardrails being a good thing, right? Like one of the notes that we got back from talking with the SEC on our product and whatnot. Like we ask everybody like 5 straightforward questions about their financial well-being, right? Like how much money do you make? How much money do you have saved up? If if you lost your job or something like that, would you be able to survive for 6 months or longer or something like that? And one of the things that the SEC said was that, hey, if somebody says, I make no money and I have no money and I can't survive for 6 months or even 1 month. They were like, you should make sure to make a very prominent warning to the user of like, hey, maybe you shouldn't invest. Like be very aware that like this is a volatile asset class, and just put that, make the guardrail there very apparent. And I think that was a really good note, right? Like you need to make sure that you're getting into something and not just like doing it on a whim, but like you understand a little bit at least of the consequences or what might happen when things don't work out like you hope they do. And it's important to try and account for that and adjust for that and plan for it.
I like that. That's pretty good. I did have a question kind of where like I feel like all of this stuff is leading, and there's been a ton of talk about it. As far as a central bank digital currency, I have a very basic understanding of what this is. What I feel like it is like a digital dollar, a digital yen, or a digital fiat currency. And I guess some of the connotations I hear is that it would allow the government to have full visibility of how people are spending their funds, all the way up to like crazy conspiracy theories that I don't even want to repeat. But Morgan, I've been saving this question for you because I know that you just have so much experience like in TradFi, like electronic payments, things like that. Like to you, like what is the central bank digital currency going to be, and what kind of risk thing are we looking at?
Yeah, I think even just today, it might have been the UAE declaring that they're working on a central bank digital currency. So, this is at the front of minds, I think, of a lot of regulators, not just in the US, but around the planet. And that's both, I think from the standpoint of the crypto community, it's terrifying. Just as we're kind of entering this period of, and then they'll fight you. We're in that period right now. And, the central bank digital currency is a tool that will be used to wage war on an industry. Like there is no doubt that that's coming, and that is how it will be utilized. The fascinating part, I think, is if these central bank digital currencies are implemented in any such way that they closely resemble blockchain, in the standpoint of if I can have some and I can send it to Taylor or can send it to you, Jon, these central bank digital currencies will have to compete on a level I don't think they're used to competing at. And that's interesting from the standpoint of benefiting people around the world, because now you have these currencies that are competing on a whole new level. If I can use that to, send Taylor digital yuan if we go to lunch together, that's now a different world that we weren't living in before. And so these currencies will now be extremely finely tracked. And if they want to be considered digital, their supplies need to be made extremely public, and the elements of privacy that they will provide will be crystal clear. And I think that's what scares me the most is the elements of privacy. Like I've heard one side say, there's capabilities of making an extremely private central bank digital currency. whereas on the other side, it's, extremely public, track, your every spending, every dollar you spend. So it's, you know, we have some private currencies in terms of in crypto, Monero, Zcash, some kind of second layer applications such as Aztec Network, and certainly the ones that have been banned so far in terms of Tornado Cash. And it's a treacherous line to be able to even interact with some of those contracts. How will that be brought over into the CBDC space? Like, undetermined. I think I don't think it's a good thing overall. I think in general, like, if we get great news, we get some type of news, it's most likely to be bad. But at the same time, everyone in crypto is fighting on the other side of that. It's kind of one of these underlying core concepts of, this is what we're trying to disintermediate. The separation of money and state is important to us, or at least the reflection of it or appreciation of it. And so I'm nervous as we enter this war, but at the same time, it is thrilling, and there is an adrenaline rush that we've reached this stage. Crypto is now fighting against, the top dollar in terms of like the dollar, the yuan, whatever it might be. We're at war now, and it's, I think we'll slowly come up to speed of this is our reality of the tools that we're using and the inherent advantages that they provide, and what governments decide to, I think, like we said earlier in the conversation, in terms of compliance and regulation, what governments decide to work with their citizens and which ones work against their citizens, and it'll be crystal clear. What kind of different jurisdictions choose in terms of to implement into these, new digital payment system, whether it's a one-to-one conversion from fiat into digital, how fast you can do that, if it's private or not. All of these things need to be highly ridiculed and criticized in comparison to what we have now in terms of Bitcoin and Ethereum and some of the other major players.
Yeah, I mean, I think in the very immediate sense of things, like, I agree with that binary assessment of it's going to become crystal clear of you're either working with the company or not working with the blockchain, right? Like, it's the fight or whatever seems very realistic. I think that long term, though, I think like much like every single thing, right? Like, it's much more going to be a middle ground aspect, and I think that your comparison of like the CBDCs are going to have to compete with other currencies or compete with blockchain currencies, I think, is the important one, right? Because you have let's take the example where you have a CBDC, the US bank comes out with a CBDC, right? It's a digital dollar. They're going to have to release, a checklist of things of what this currency does and why it's approved by the bank and like why it works within the system. And you'll be able to take that checklist and apply it to any other stablecoin, and that stablecoin will say, "Hey, look, we're just as compliant as the CBDC, but we have this extra feature, or we have this extra item." And you'll start getting this meld of, CBDCs integrating some of the features that are prominent or are more used. Morgan, I mean, you talk about Zcash and some of the interesting stuff that goes on there where, hey, they don't need to validate every aspect of a transaction. It's the whole hat problem, right? They just lift it up, take a little peek. Oh, that little piece is fine. And you have tons of people validating that. And it's like, oh, this whole piece is actually validated. You can apply that same thinking to KYC aspects or AML aspects, where you say, hey, let's just take a small peek at some of these funds or some of these dollars that are being transferred and whatnot, and see if they're compliant, or if they aren't compliant or whatever, in a very privacy-centric way. And so I think that long term, you're just going to see a meld of everything, and it's going to, even though it starts as a fight, it's going to, it's going to peter out, and people are going to find out that they actually like each other and just like hang out. So, or at least that's the hope, right?
I hope so.
Yeah.
I hope so.
Yeah. I mean, either that or it's a fight forever, right? Like at some point, something's going to win out, and it's going to be very hard to kill an unkillable thing. Which is crypto.
Yeah, the competition thing, that's very much stuck out in my mind as well, because essentially we do have currencies competing somewhat already, right? Like on a, I don't know, kind of basic forex level, there's, the value of this currency over another. But once everything is completely digital, like then you kind of open up the door for one state to manipulate the currency of another state, which I'm sure happens already to some degree, but maybe it happens at scale, right? Like, or it happens more quickly. Is that like a potentially a risk factor as well?
Yeah, like, you have transparent manipulation, in terms of governments fighting other governments now. It's not
Right.
just, the Japan selling US bonds. All right, 48 hours later, you know it in time. Like, they're doing that. I can see it. I can show you it on my phone in terms of on the on-chain transactions. So, like,
Mm-hmm.
if we get to that level, that would be wow. Like, that's
Retaliate or this
yeah,
or that. North
that's
Korea's
monetary.
in
Exactly, that's like
mm-hmm.
monetary warfare there, and in broad
Mm-hmm.
daylight. And so I'd say that's more scary than it is, oh hey, look at this new technology and how we're implementing blockchain.
Mm-hmm.
That's more like, all right, this is a new classification of warfare where the how you fight with money is kind of the next level of than physical combat. And so
Mm-hmm.
removing someone's purchasing power as a country uh, is destabilizing on the most fundamental aspect of say you remove the U.S. dollar from circulation. All right, what do we barter with? You know what I mean? Is it the
Right.
silver ingots, or is it tiny pieces of gold, or is it Bitcoin? What do you ultimately kind of rely back on? Is I don't know. It is not something I think about on an everyday basis. At least not yet.
Mm-hmm.
Yeah, and I think that's what makes it scary, right? Like all of the whatever the scam companies or collapsing companies or monetary warfare, like all that stuff is already happening, right? Like it
Mm-hmm.
already exists in traditional finance. It already exists in the traditional system of stuff. It's just that as soon as you apply blockchain to it, it's transparent. It's obvious and visible to everybody and not just the people who are in the know, kind of thing. And so that's what makes it terrifying, is that like suddenly you see these things going on and you didn't see them before. And I
Mm-hmm.
think that's where the compliance aspect of things actually comes into play really nicely, right? Like suddenly the compliance checks and the validation and the testing and whatnot also becomes transparent. It also becomes visible. And the risks of any of it are just like readily apparent. And like, I think that a solid example is from a couple of years ago when Facebook, which was then still Facebook, tried to launch their stablecoin, right? And they said, "Hey, we're going to have like this giant basket of world funds, and it's going to be 30% X, 15% yen, 10% blah blah blah." And the government shut it down because they were like, "If you change the allocation of this fund, you can destroy a country." Like overnight, you can just absolutely send their currency into the ground, and like visibly, like it in a very apparent and obvious way. And so I think you're just going to see that trickle through everything, where
Mm-hmm.
companies that try to do that, people are going to be like, no, we don't support this, or hey, this
Mm-hmm.
is a bad idea, and it's going to get applied at the state level, it's going to get applied at the government level, it's going to get applied at the country level, or whatever. It's just going to seep into everything. This need for checks and compliance, and that you're doing things the right way.
From the hedgehog side, Taylor, would you onboard the rails for supporting a U.S. central bank digital currency? Like, would that make things easier from the standpoint of integrating banks or like a fiat on ramping system, or does that make it harder? Potentially new types of regulations and compliance things to be able to add.
I mean, like, is it any harder than just integrating Wallet Connect? I don't know. Like, I think everything has its own challenges. Everything has its own set of coding rules, in a lot of ways. Everything has its own set of documentation and checks that you have to go through. I don't think adding a CBDC as a rail is any more complicated necessarily than anything else. You just it's just a different set of rules. If the question is like, morally, like, or ethically, like, would we take that approach? I think that the answer has to be like, if it's a valid thing that a user can own or invest in or hold and make a decision on, then like, yes, you have to attempt to enable something like that. You have to give somebody the option of investing in something or using something. It's not our place to say, hey, you can't do this, or like, that's wrong, or you can't invest in this. It's our place to just try and help.
I'm imagining my hedgehog portfolio of the future, and I've got this 5% fiat basket, which is automatically rebalanced between the US dollar, the yen, the Aussie dollar, the Canadian dollar.
I mean, you laugh about that, but like,
I'm serious. I'm 100% serious.
I mean, that's like one of the things that we integrated into Stacks was a US, like a specific USD allocation as a way to reduce volatility of anything. And you can set it at like 0% if you want to. You can set it at 5% or 10%. And the only effect of adding a stable coin that gets rebalanced into is just that it reduces the top amount that you could have made, but it also reduces the low amount that you could have lost. It just reduces volatility. And the way to continue to reduce volatility is to diversify that USD allocation into a stablecoin allocation where, yeah, sure, part of it's USD, part of it's USDC, part of it's whatever, part of it's gold or whatever. But like, that's valid and real, and certainly something we've implemented part of it, and it just needs to expand from there.
Assisting our transition into the barter economy of the future.
Right.
Yep. Someday I'm going to sell my NFT for Taylor Swift tickets on Hopscotch. That's what I see as well.
Yes, you are.
Yeah. It's a bright new world. All right, this is good. What about like in the future, immediate future, short-term future? There's a lot of talk going around. The SEC is, making its rounds as well. Anything you foresee coming up? I know no one's got a crystal ball. Good, bad, or indifferent. How do you think the next 6 months will go?
Yeah, I mean, I think nobody has a crystal ball, and everybody has a cloudy ball. I think specifically, like, everybody has a ball that you are trying to look into, and you see absolutely nothing, right? Like, there's no guesstimation short term that is going to be a valid one anyway, one way or the other. You're essentially just placing a bet if you say, hey, this is going to happen or that's going to happen. I think it's a scary time, certainly, to be a startup in the financial crypto world. I think that runway is a very important aspect, and it becomes a lot harder. I think if you're a big company, it's a lot easier to weather any aspect and plan for the 5-year term or the 6-year term. So, I mean, I think it's all about just like, you have a plan, you have to have a backup plan, and you have to have a backup plan backing up that plan. You have to have a backup plan backing up the backup plan that backed up the backup plan. Like, it's just a lot of like, okay, if this fails, what do we do, right? Like, when we approached crypto deposits, like, we took it from a perspective of, okay, let's integrate Wallet Connect V2, Coinbase Wallet, and Plaid's wallet. So we have 4 different options of like, as we code this, as we build this, which one's going to work? Which one's going to be the easiest? Which one is going to be the most secure? And I think that's just the approach that you have to take regarding everything, is just okay, if this doesn't work as a business, like, what's our fallback? Okay, we can't deposit fiat right now. What's our deposit? It's crypto. Okay. If we can't deposit crypto, what's our fallback? It's a digital dollar. It's a CBDC. I don't know. But like, I think that's the strategy that you kind of have to take. And it's scary, certainly. It's stressful. It's a lot to consider, especially when you're trying to support a team and build a team and have everybody kind of working together. It can be quite scary when faced with the runway question of like, are we going to survive? Are we going to make it? How can we make it? What can we do to move quicker? What can we do to move better? It's a heavy thing to try and get through, and I think that like the only way to get through it is honestly, it's a community aspect, right? It's doing it as a team. It's doing it. It's not a single person. It's a decentralized sort of decision, or a community decision, or a transparency decision. Like it's just yeah. I think it's going to be a very interesting couple of years for startups, especially in the U.S. Yeah.
Yeah. What do you think, Morgan?
I want to read something from a paper, from one of our papers that we actually just finished, and it kind of best describes some of our thoughts towards, the next few months, how some of the existing players will compare versus kind of new technologies, and a little bit on what Taylor said. It kind of drives home the point of connectivity is, especially diversified connectivity, is alpha in this space. Like the more connections you have, the more backup plans you have, is extremely advantageous, whether it's banking applications, which we've talked about before in terms of banking accounts, or if it's connectivity to Wallet Connect versus MetaMask. It matters, and it's important to have these backup plans. But I'll read from our document and tell me if this is kind of what you're going for. We must not forget that our technology will be recreated, copied, and stolen regardless of our efforts. We won't always have the best price or all of the right integrations. What matters is saving people time and money. Our competition isn't with market makers, it's with Coinbase and Binance, providing the appropriate infrastructure for the next generation of self-custodied crypto users is a time and money saving advantage over the competition. That was it. And it's kind of like driving the home aspect of, all right, we might not have the perfect set of tools for every job here, but ultimately, what we need to be able to do is save our users time and money. That is how we gain value as a business, and is what we need to always be coming back towards in terms of whatever decisions we make as a business, whether that's integrating the next tool or supporting a different blockchain. Ultimately, it comes down to saving people time and money.
What a great compass. I love that. Very, very good. I can't think of a better way to wrap this thing up. That was really good. Is there anything you guys want to add? Taylor, any final thoughts?
No, I mean, like when you wrote that, Morgan, I was just like, this is that's how to phrase it. That was it.
Thank you.
Yeah.
It was like, good job. I think it was like section 3.1 or whatever, or 2, whatever it was.
Writing was your thing. I want you to remember that.
Yeah, I just jumped in and was like, do some things.
No, I mean, like that's, you went to school for that. You were always the writer in the family, had amazing words, and look at you. You're now the kind of, doing all the development React work, and I'm now writing interesting stuff.
Right. Let's not forget that you wrote my speech at college, in college.
Oh yeah, John, I don't know if you know this.
I don't know this story.
Yeah, Taylor, you tell him. It's much better spoken from you.
So I went to school for filmmaking, creative writing, and programming. And so my freshman year, I got like a small grant to make a movie. It's called Cadence or whatever. But like I got to go up on stage and like present, like give a little preamble for this thing. And I was just like, oh man, like I don't know what to say, like blah blah blah. The night before, I was just like, Morgan, do you wanna just like write this for me? Do you wanna like help me write it or help me set this up? And so he basically just copied the Any Given Sunday speech, but adjusted it so that it worked for the film that we had made. And so it was, you got to claw with your fingernails for every inch.
Frame by frame, we'll take them down.
Yeah, frame by frame. And whatever, you look back on that and you're like, nah, maybe that was a little much.
I love it.
But certainly, I think that's definitely evocative of a lot of the processes and things that even we're going through today. Is that that speech, you're clawing with your fingernails for every single inch at this point. You're fighting, and you're not necessarily just fighting regulations or the government or whatever. Like you're just fighting to do what's right. You're trying to fight for the consumer. You're trying to fight for saving them time or saving them money and finding those ways and just clawing, every cent or every Satoshi or whatever that you can help save. It's a fight worth having.
Every Satoshi. That's good. And what a developer way to go to about writing a speech is to take a badass football speech and reiterate it into a film speech. That's amazing.
When Taylor dropped off the story is that like throughout our life, he's written speeches for me in terms of when I was running for, class representative roles and things like that. And it was an honor to return the favor in terms of this opportunity.
Love it.
So, yeah,
you got the stamp of approval, and today too on this last piece you wrote. It's a good week, Morgan.
It's a good week. Hopefully, it's going to get even better.
Nope.
I know you can't say that part yet, but hopefully next time you will. I'm excited about that.
Cool.
All right, you guys. Well, this was good. I appreciate it. Appreciate your time. We'll see you on the next one.
Sounds good.